We're talking about today the usage of Bollinger Band in Forex trading. When you start to learn how to trade Forex, understanding what the candles are, what the bearish and the bullish candle are, entry the market is key. If you want to succeed in Forex trading, taking your entry into this market is key. So you need to be very careful where you take your trade, and for you to be able to do this, you need certain measure of patience. Patience is required, and you must understand that we have over 100 different indicators, and among these indicators we have narrowed it down to Bollinger Band. Let's look at how Bollinger Band help traders to take an entry into the market. So Bollinger Band, essentially, what are the features of Bollinger Band? Bollinger Band, when you go to the indicators, you go to trend, this is Bollinger Band, you click on it, you put 50 here, you put your deviation to close, then you click, depending on the color you want. Then you could decide to choose any of these number of minutes and hours, but I'm breaking it down because we are learners. We are trying to learn, understand how to trade. We are narrowing it down to 15 minutes Bollinger Band. Now the Bollinger Band has been placed on the market. This tiny up and down candles you are seeing is the market, and this is the market volatility going up and down. You could see this market. When I scroll, you will discover that this market is coming from up, then it's coming down, then from down again it goes up, then it starts coming down, from down again it goes up, then it starts coming down, then from down again it goes up, it starts coming down, then it goes up again, then it starts coming down, it comes down here and goes up. So Bollinger Band has been able to give you three different lines, and each of these lines are different deviations. These deviations help you to determine the volatility of currency in the market. Once there is an opening, like from this particular point, there is an opening, it breaks out from here. You can see the Bollinger Band has expanded, and when you come here again, you discover that the Bollinger Band has stretched out down and it has expanded up. So there is a breakout here. At this point you have a breakout, at this point you have a breakout, and the market moves from here to this point, came back down, then break out here again. So you could see these are two different areas where the Bollinger Band breaks out from this particular point. Then if you want to look at how much one has been able to, if you take your trade from this very point to this point, is going to give you how many pips? Close to 1051 pips. We can call it 105 pips or 1051 pips, as the case may be, which is humongous. So you could see using Bollinger Band to trade is key, and it's not the only indicator, but we are narrowing it down today on the usage of Bollinger Band in taking your entry and what is involved. So we need to be let me increase this so that you can see that Bollinger Band is used to determine the entry and the exit of a trade. Most times the Bollinger Band contracted at this point. The breakout here is what we call, breakout, and at times we call this overbought. If it break out here, it means it has been overbought. So you need to sell. You sell from up, down, then you buy from down, up. You sell from up, down. By the time this trade finishes is descending, is bearish mode today, you would have seen that it's going to turn in. Then by the time it turns in, it will turn to a buy. How do we determine where to buy? We could decide to say, okay, let's take the middle Bollinger Band. Each times it breaks and close above it, we can take our trade from here, then put our stop loss below, so that we can take this 408 pips. So Bollinger Band is an indicator that reacts to market volatility. This Bollinger Band, the upper band, the middle deviation, the lower deviations, I'm using different nomenclatures. You can call it line, the Bollinger Band line, the upper line, the middle line, the lower line, or the three lines. These are all deviations. And once the deviation expands, it tells you it's going to give you a bigger money at that moment. You could see, once this deviation expands here, it gives you a bigger money. So it is good you clock just a trade and roll it, scroll backward, look at the historical performance of the Bollinger Band, and we need to be very, very careful in determining where we take our trade. Look, each time the Bollinger moves from up down, we need measurable amount of patience to be able to take an entry at this point. Taking an entry at this point is key. When you are able to take entry at this point and you exit at this point, this is humongous, because what you will be getting in the market will be from here to this point, and this could be also be seen as 202,289 pips, which span from on the 21st of December 2021 to on the 23rd of December 2021. So you need certain amount of patience to be able to use Bollinger Band. So today, what I want you to do is to plot any of the prices, any of the market volatility with a Bollinger Band of 50, as I explained. Then go backwards, scroll and check where it contracted. Where it contracted is key, both up and down. I want you to subscribe to We Are Alpha Dominion Traders. As you are reading this on daily basis, we'll be giving you a post on how you can trade. Not just trading and making money. Trading and making money, little money by little money, is key, because this market volatility is much for everybody. So you can come into the market, look at where it is convenient for you, go into the market, put your trade and make little money. When you add $10 plus $10 plus $10 in 10 places, that is how much? $100, which is huge. So I would like you to subscribe by hitting the button subscription here. Hit the button subscribe to Alpha Dominion Traders. While you continue to grow with us, we will teach you the process, the patterns, and other areas, other things you need to know in taking your trade. Thank you.